looks like a disappointment. The GDP number coming in at 7.1%, and this is GDP. As a rule, GVA tends to be a little lower because we are in a season of lower subsidy and higher indirect taxes, and therefore the GVA number would be even lower. But we have to wait for see what the GVA number comes at. At the moment, this is not looking like a very good GDP number at all, 7.1%. Well, I could toss to you immediately, Samiran, your first thoughts before we start getting the details.
We have the GVA data as well.
Sorry.
I think it's coming at 7.3%. That's what we will be flashing soon enough. So the GVA data is actually coming higher than the GDP data. So that's coming in line with our estimates at around 7.3% versus 7.3% on a Q-on-Q basis as well, or 7.4% on a sequential basis. I agree.
Samiran, how do you explain this?
Well, it's a bit of a puzzle. I need to see the numbers a bit more. But honestly, we were expecting a lower print on GDP for this quarter, primarily because most of the activity indicators were showing a bit of a downturn, as well as there was a negative base effect. And thirdly, there was a problem with the deflator being much higher.
1 minute. Now that the PIB website is obliging, I can give you the other numbers as well. Agriculture has grown by 1.8%. Mining has contracted by 0.4%. That's a surprise. Manufacturing is up 9.1%. And I think Ekta's poll was anyway speaking about 9.3%. Electricity has come in at 9.4%. Again, a very strong performance. Construction, no improvement at all, coming in at 1.5%. So that's a huge disappointment. Trade, hotels and transport has come in at 8.1% compared to 10% year ago, same quarter. And finance sector growing at 9.4%, similar to the last quarter, year ago quarter, I mean. And finally, public administration is doing extremely well, with a growth of 12.3%. So that's really the positive, but a huge negative coming in mining and in construction as well. Those are the two sectors that have pulled down, and mining has a decent amount of weight, you will have to say. Among the weighty sectors, it's construction that's gone down to a paltry 1.5%. I might as well read out the other numbers on private final consumption as well. I don't think we have the year. I think we'll have to calculate that.
Yeah, we'll have to.
Ekta, any other details?
I haven't yet calculated that, but I just wanted Samiran's thoughts in terms of the discrepancy that we've seen, and now that we've read out the sectoral differences as well. Disappointment primarily from agri construction as well as from mining.
Yes, agri and construction would be two areas where things have been slower. We were expecting some slowdown in other sectors as well. So the manufacturing has probably not slowed as much as we had anticipated. So that's kind of the opposite side, a bit of a positive surprise. But overall, this is a data which is showing the uneven recovery that we have been talking of.
If I can give you a shocker, gross fixed capital formation has contracted. It's contracted from 8.9 lakh crore to 8.63 lakh crore. That is a contraction of 3.2%. The first thoughts on that, and I'll give you the consumption number in a minute. Gross fixed capital formation, the ticker team should be flashing that for you. That's fallen by 3.2%.
In fact, Latha, last quarter also we had seen a contraction in the GFCF number, which is kind of a bit contrary to what our perception is from other kinds of indicators. So this is a bit of a mystery that for 3 quarters now, the gross fixed capital formation growth seems to be very low. And it's not matching different other indicators that we are tracking. So this is an area which will probably lead to the discrepancy number in the GDP series to be very high. So we'll have to wait for the final revisions when the discrepancy number will be kind of spread onto consumption and investment, and we will then have to see where the GFCF number stands.
Well, one more word. The private final consumption expenditure is up 6.7% to 16 lakh crore. So consumption seems okay, and it's gross fixed capital formation that has disappointed. Okay, actually our other experts are with us. So let me go to Shaumyo. Shaumyo, what have you made of the numbers so far? And especially the conundrum of GVA being lower.
I think I will explain that. There are three. I think there are 3 conundrums to this number. The first thing, the conundrum which you obviously mentioned, is the GVA being lower than GDP. I think this was not entirely unexpected, because if you look into the net indirect taxes part, in the first quarter there has been a significant subsidy outgo. So I think that the subsidy outgo has possibly outweighed the indirect tax collection, and that's why it has pulled down the GVA number, GDP number lower than the GVA. So I think that's the first thing. The second thing is that regarding the public administration and defense, that is also not entirely unexpected, because in the first quarter there has been a significant jump, 20% jump in the government expenditure. So if you take that factor into account, so that explains the government expenditure part. The third thing is that I think right now the GDP number at 7.1% is a little more closer to the ground realities, because as you know that the CPI and the WPI are now more or less converging, and we just calculated the GBA deflator and the GDP deflator. The GDP deflator for this quarter is actually at 3.1. So which is nearly similar to the WPI deflator of WPI number of 3.65%, and the CPI number is also going to go down from that level. So from that level, I think the issue of this double deflation, which has been talked about, might get resolved as of now, and we will see numbers which will more closely reflect the ground realities. And the construction sector, I think it was not entirely unexpected, because cement and steel production and steel consumption is actually showing a declining trend.
Okay. Well, I'll give you all from the demand side as well. The private final consumption expenditure, like I told you, is up 6.7%. Government final consumption expenditure is up 19.1%. I mean, it's pretty huge, though, of course, in actual terms, it's not a very big number. And the number, of course, for gross fixed capital formation falling by about 3.2%. Those are the broad numbers from the expenditure side. Anubhuti Sahib is also with us. Anubhuti, your first thoughts?
Latha, if you look at the GVA numbers at 7.3%, it is primarily in line with our expectations. And the more important part here is that we expected the huge expenditure by government to be the main driver of GVA in this particular quarter. In fact, if you look at the revenue expenditure after adjusting for interest payments and even after taking into account WPI, the double-digit growth recorded in government expenditure is one of the highest since 2014. So we are not entirely surprised by what has happened on this part, and therefore our expectations on services sector growth was at around 9.2% versus 8.7% in the last quarter of 2016. So in that particular aspect, not much of a surprise. Even on the industry part, we are not entirely surprised. But the numbers which you have given, I think there probably industry has fared worse than what we were looking at. We expected at least a better performance from the mining sector, and even on the slightly little better on manufacturing sector, especially given that corporate earnings were doing good in this particular quarter. So net-net, not entirely surprised either by the headline number nor the main driver. But yes, on industry, especially on the mining side, yes, there is a bit of disappointment on that part. On the expenditure side, I think, yes, I would agree with what was spoken before. Investment contracting for yet another quarter, that completely leaves us very, very puzzled. When the FY16 full year number was given, we all were left in a very puzzled state, because we always thought that public investment was at least helping the investment cycle to move higher. Not in leaps and bounds, but at least there was some improvement. Okay. But with this particular number, again, there is a lot of disappointment on that front.
Okay, well, Shamira, now you have all the numbers in front of you, though I know you're just getting in line by line. Your thoughts, this unusual increase in subsidies that Soumya is talking about, that's not the law of the land. The law of the land did not show an increase in subsidies. How do we explain this conundrum of higher GVA number over GDP?
This is partly getting reflected in the public spending number as well.
Yes.
So there seems to be, this in my view is more of a one-off, and we should ignore the fact. We should also ignore part of the decline in the GDP number also, because this is driven by a significant increase in the deflator for this quarter. So as we move forward in the year, the deflator effect will come off, and we will probably see a much better number coming on the GDP side. So I'm not overly worried by this decline. But having said that, this just reflects the fact that this quarter kind of was a decline compared to the last quarter, and then we can't escape from that.
I think the disappointment really has come in terms of industry. So if you calculate it with construction, which is, it comes to a growth of around 6% and we were working with an estimated growth of around 7.5% for the entire industries this time, Latha. So industries along with agriculture, I think, has been the disappointment. But services manages to hold up to close to around a 10% growth. Samran, your sense in terms of what the trend for services at least would be in FY17?
So before I go to services, just one point on that industry side. See, what has happened is that the construction thing, because this year the monsoon had come in June itself compared to last year, we have seen this in the cement data as well. So to some extent, that is getting reflected in a lower construction number. And also the fact that the WPI increase that we had seen in this quarter of almost 100 basis points more than the last quarter, that would hit the industry, real industrial growth more than in the services growth. And because of these two reasons, the industry number is that much lower. But yes, the services number has also surprised me a little bit on the upside. I would have probably expected something around a 9% number, but it's a bit higher than that.
Okay. On the deflator point that Soumya was making, the deflator has reduced. I mean, now it looks like the discrepancy caused by a huge WPI downturn and a not so huge CPI downturn is not to be seen. Actually, in market prices, the GDP has actually risen by 9.9%. So it does look like now the deflator is not a huge problem.
Yes, so that's what I was saying, that going forward, we would probably see better real GDP growth numbers because we are not expecting the WPI numbers to go up that significantly over the next few quarters.
Okay.
If that turns out to be true, then probably this is kind of a bottom this year on at least the quarterly GDP prints.
Okay. Well, Soumya, now that you have more time to dwell on the numbers, your key thoughts?
No, the one thing which I want to add to the discussions which I had, I think I'm a little disappointed with the agriculture data because I think there was indication that the agriculture should actually, we are working with the numbers close to 3%. But given the fact that there has been an increase in the cereal output, the oilseed output, the pulse output has declined. So, and also the invariant part of the agricultural sector, basically the forestry and all the fishing, I think that was also doing quite well. So I am a little bit surprised that the agriculture has not done well, and also the fact that the mining sector, because remember that the first quarter IIP, if we look into the number, there is actually a contraction of 0.17%, but whatever growth we have seen is in the mining and electricity sectors. So I am not sure about the mining, why it has done so badly, but overall a number which somehow reflects, I mean, which is closer to the reality as of now in terms of the GDP number. And as Shomiran was pointing out, over a point of time, as WPI and CPI converges, as CPI declines and WPI possibly goes up a little bit from here, the deflator problem will get resolved and we'll get numbers which will be, I mean, will be in consonance with the ground realities. So possibly the downside on the GDP at 7.1% may be the downside of this year, and we can see some good numbers going forward.
Okay, I just wanted to point out, Shomiran and Soumya actually, if Soumya, if you have the table as well in front of you, while the agricultural growth in real terms, the GVAs added only 1.8%. If you looked at it in nominal terms, it's added 8.2%, probably reflecting the higher agricultural prices. Is there more to read in this?
I mean, we were anticipating almost a 4% real agricultural growth on the back of the better agriculture performance, because typically what happens is that the better Rabi season, that gets reflected in the first quarter's number. So it surprised me a bit, and it kind of explains now that they've used a higher deflator here, and that's why we're seeing a lower real agricultural growth compared to a much higher nominal value.
Okay. We have Anubhuti Sahai with us as well. Anubhuti, so just wanted to come in on the agri bit then. What are you estimating for the entire FY17, even though 1.8% is what it's reported this quarter? What would the exit FY17 growth be for agri according to you?
Yeah, before I come to that point, Ekta, I would just like to highlight something on the consumption side. So there is a lot of focus on investment, which has contracted for second quarter in succession. But if you actually look at the household expenditure growth, which was pointed out at 6.7%, it is significantly lower than two consecutive quarters of plus 8% growth for the December as well as the March ending quarter. So there is a little bit of slowdown on that part too. Here again, I'll say that a lot of this slowdown is probably getting driven by urban demand. That, in our view, according to our composite indicator, there was a plateauing out of urban demand, and that was probably more than offset the improvement on the rural demand. The other point is that if you actually look at GDP excluding discrepancies, if you remember in FY16, GDP discrepancy played a very big role. Even in the last quarter, discrepancy was huge, and it made us very difficult to understand what was the exact driver of GDP. This time,
the discrepancy is almost next to nothing. It's just come in at 761 crores compared to last time 49,000, almost a 50,000 crore last time. So the year ago discrepancy.
Yeah. Yeah, so GDP excluding discrepancies is just 6.7%, sharply higher than 3.9%.
Okay, sorry.
Very close
No,
to
I'm sorry. I should stand corrected. I was reading last time. Sorry, Samiran, go ahead. I think the discrepancy is coming in at 26,000 crores. Yeah. So there is a discrepancy.
Yes, there is a large number on discrepancy. And since last year's discrepancy was very small for the same quarter, it would show up as a pretty high growth rate in discrepancies.
Okay. I think that about sums up. There has been a huge amount of government expenditure, but the negative really has been that capital formation has been none too good. The other big surprise comes in agriculture, which has grown by only 1.8%. But there it appears that the number has been deflated by the very high prices that perhaps was evident in some crops like baby sugar and oil seeds, and that may have contributed. Yes.
Vegetables also.
As well, yeah. So vegetables as well, and that may have contributed, pulses as well, may have contributed to the lower agricultural GDP. Manufacturing at 9.1 is not a bad number at all, and there you can't blame prices. It's pretty flat. It's 9.1 real GVA growth as well as 10.3 manufacturing growth in nominal terms. So looks like manufacturing is better than you expected, Shamira?
Manufacturing is more or less in line, maybe a tad better, because we were expecting a slightly higher deflator for manufacturing given that WPI had moved up. So pleasantly surprised with the manufacturing number to be at 9% plus again.
Okay. Xiaomyu, anything to add on manufacturing?
No, I think the manufacturing numbers are more or less in line with our expectations, and primarily, I mean, the number I think is close to and more than
9.1%.
9.1%. So we are actually around 8.6%. So the number is in line with the expectations. But the surprising thing, as we have just said, is the agricultural part, and that possibly goes against the trend of a good agricultural growth in every year in the first quarter.
Fair
so I think
point.
That's a bit of a
Well, there is a gentleman here who perhaps can explain these much better since he has worked these numbers for so long. Dr. Pranab Sen, former advisor to the Planning Commission, former chief statistician and chairman of the Statistics Commission, joins us. Dr. Sen, by now I guess you know the numbers. I don't have to read them out to you. The first surprise is that the GVA number has come in higher than the GDP, and then of course the lower than expected agriculture number.
Well, no, I mean, I don't know why people were expecting a higher agricultural number because, this was the tail end of the drought, number one. And number two, we did have unseasonable weather over the winter. So, there were advanced estimates on agriculture, I think, which threw people off. But the Rabi procurement was very weak. So, yeah, I was pretty much, in fact, I think 1.8 was higher than I.
Okay. Well, what about the from the expenditure side, the capital formation showing a contraction of about 3%, but government consumption, final consumption showing a rise of nearly 19% and personal consumption 6.7%.
Again, I'm not very sure as to what that's picking up, but I suspect a lot of that would be related to the fact that your net indirect taxes have actually shown a dip, which is that the first quarter there's been huge payouts that the government has undertaken to offset the bills that were pending from the previous period, as well as the advanced tax collection, the excess advanced tax collection. So all of this is telling pretty much the same story, which is a little bit of manipulation on the government budget.
Okay, maybe, sir, but we just got the government's fiscal deficit numbers. The plan expenditure didn't show a big rise, though we are speaking about a different period altogether. That was the July number. But even the April-July number did not show a very big rise. It was, I mean, it wasn't definitely indicating a 19% rise in government expenditure. Any other key takeaway, sir, is the market prices GVA is indicating a 9.9% increase, and the real rate growth is 7.3%. What does that tell you about the deflator? Is it now normalizing?
Yeah, I mean, I think we all knew this, didn't we? That the effect of the commodity price reduction is pretty much so wearing out. So you are now looking at a lower base, and therefore these figures will tend to go up to something which looks a lot more normal.
Did the construction number disappoint you at 1.5%?
Yes, in fact, the construction has been the biggest worry. I mean, we keep talking about jobs and we keep talking about manufacturing, but the fact of the matter is, after agriculture, construction is the largest employer.
Okay.
And that's a huge problem.
Dr. Sen, exactly on the point of construction, do you expect a recovery to take place possibly in the second half of the year? One of our experts did point out that construction could have been skewed this time round simply because of the heavy rains that we've seen as well.
Yeah, this is possible because this time the rains came on time. But the real issue is that last year the government announced a lot of infrastructure projects had been approved. And we have been waiting for that to show up on the ground, which would essentially show up in construction. And it hasn't happened so far. So I'm still waiting for that to happen.
Okay. I was also looking forward to you explaining a little more as to why the GVA is higher than the GDP.
Well, for the very simple reason, what that says, in effect, is net indirect taxes have shrunk.
Okay. But subsidies have not shot up. I mean, we didn't see anything in the budget that increased the subsidy payout.
No, it's not a subsidy payout. Usually what happens is in the fourth quarter, the tax people actually collect more than is legitimate and then pay back in the first quarter. So this is a quarterly aberration and should not be taken as an indicator of what's going to happen for the full year.
Okay. Shamiran, anything more to add on the GDP numbers?
No, I just wanted to ask Dr. Sen that on that particular issue of tax being refunded back, is it more to do with the direct taxes or does it happen with indirect taxes as well?
Only indirect taxes.
Okay. Shaumyo, now that you heard Dr. Sen, any further comments on the GDP number?
No, I think the numbers, don't have any further to comment. The only thing I would like to say is that this discrepancy between GDP and GVA actually should wear off over time, and you will see a much better GDP numbers in the next 2-3 quarters.
So what are you working with for a full year?
We are still working with a number of 7.8%, and we'll take a call on how the numbers looks like after the second quarter numbers are released.
Shamiran, you would share that optimism after seeing the first quarter GDP number?
Well, we have a 7.7 for the full year. Yes, clearly that depends on how much of consumption growth we get out of both the good monsoon as well as from the pay commission. Because as Anubhuti was mentioning, the 6.7% private consumption growth, if you ask me, one point which has been really jarring in the whole thing is the consumption growth declining from 8% plus to 6.7%. How much of a boost can monsoon and pay commission give? Because our 7.7 builds in more than 8%, almost 8.5% private consumption growth. So do we get back to that kind of a number? That will be the question that I will have in my mind.
But Dr. Sen, should we really worry too much about or even overinterpret the expenditure side of the numbers? Historically, those are largely derived numbers, isn't it? So should we worry too much about this fall of this slowing down of private consumption to 6.7%?
Well, the thing is, it's not entirely without a message.
Okay.
And the message, I think, is pretty clear, which is that the rural demand effect, which was problematic to begin with, everybody had expected that with good monsoons that would revive. And all I want to point out is the period that we are dealing with it is the first quarter, is where those expectations wouldn't have kicked in.
Yes.
So you really should be looking at what's happening to consumption expenditure from the second quarter
So,
on.
but Shabiran is pointing out that the previous year that he's comparing with was also a drought year, right? So should we worry that this quarter has not even kept up to 8% private final consumption?
In fact, I feel very strange saying this, but earlier we used to all worry desperately if the consumption growth was faster than GDP growth.
Okay.
All right?
Okay.
Because what it was saying, in effect, you are not generating sufficient savings for boosting investments.
Okay.
Now we seem to have gotten caught in the trap that unless consumption growth is higher than GDP growth, there's something wrong.
So just
So I still think we need to go back to the old way of thinking and worrying what's happening to domestic savings.
Okay, we have Anand Tandon, market expert, joining in with his take as well. Anand, do you think that this GDP number might in fact disappoint the markets and we could see some red simply on account of the GDP figure?
So for the first part, will it disappoint? I think yes. Will you see red? I don't know. I think right now the market is not particularly keen on looking at any real numbers. And we are, flowing along with the tide. But just to add, in terms of the GDP, I'm not sure whether we are factoring in the fact that the rains have been excessive in many parts of the country, and therefore the agricultural growth may be subdued even going forward. And of course, there is a message for the market in terms of the lower consumption, except to the effect that because of the pay commission, that may get corrected later on.
Okay. That point is taken, Anand. At the moment, the markets are in a different mood altogether and may dismiss this as lagged data. After all, it ends with June 30th. But Dr. Sen, how would you extrapolate this number? Practically everybody is working with, I think the Reserve Bank is the most conservative number at 7.6%. Our economists on the panel are working with 7.7 and 7.8%. Where would you place the year? Because the first number is only 7.1.
The fact is that we really shouldn't get our expectations too far up. On a quarterly basis, if over the next 3 quarters we can average around 8%, I would be delighted. I don't think it's going to happen. I think it's a little less than that. So we are looking at effectively somewhere around 7.6, 7.7.
You would say that the overall number, we could manage 7.6, 7.7?
Yeah.
Okay, so this gets made up with a 8% in some quarter?
Yeah, roughly.
In the second half?
Well, second half, 8%.
Okay. Well, that's a positive note to end this conversation. Our economists are all expecting that they don't have to really cut the full year GDP growth. They are sticking with 7.6 to 7.8. So this number is a disappointment, but that perhaps can be explained by some technical factors as well of maybe tax write-backs or tax repayments and therefore in the months to come, probably with a mix of a good harvest and probably pay commission award, the consumption side could pick up. Anand Tandon, of course, believes that that may not necessarily be the case, but we will go with some bit of optimism that we have from our economists. Shabiran, Shaumyo, Dr. Sen, Anand Tandon and Anubhuti, thank you very much for joining us in this conversation.